Hey y'all, my name is Stephen Lights. I'm the owner and founder of Workforce 2080, and welcome to this video on cash tips. So what I want to do is I want to dedicate some time to talk about some terms with you that I think are important for you to understand as a tipped employee. But I also want to define two specific scenarios for you today. Cash tips, but primarily I want to say, high cash tips. And then I want another scenario to be what's called low cash tips. Now, before we jump into these terms interchangeably and go through these specific scenarios with you, I do want to cover some common terms that you need to be aware of. So if you work in a state like the state of Louisiana, which is where I live, the minimum wage is actually $7.25 an hour. But this is actually broken up into two components. There's $2.13 an hour, and this is the cash wage. And then there's $5.12 per hour. And this is what's known as the tip credit. So just to let you know, if you work for a restaurant, every hour you work, you have to be paid at least minimum wage. So that's a given. That's an absolute given. No matter what job you do in this world, if you're a non-exempt employee, you must be paid $7.25 an hour if you work in a state that pays that much. If you work in a different state where it's a higher minimum wage, obviously the rules are different. But we're just keeping this simple. So this cash wage is actually what your employer is going to pay you for every hour you work. So $2.13 an hour cash wage, that's what's owed to you. Now, if you earn enough in tips, more at least $5.12 per hour or more, your employer can take a tip credit against that wage so they don't have to pay you. So in other words, the employer is 100% responsible for this. And this is basically what's going to be taken up by tips given by customers. So I can tell you without a shadow of a doubt that you're in the customers that are actually you're waiting on, they're paying about 80% of your wage if they give you an applicable tip credit. So it's pretty significant. So there's a lot of weight that's placed on tipping employees in the state of, or should we say, in the United States. So that's what occurs with this situation. Now, again, when they pay, like if you work overtime hours, that tip credit still is only $5.12 an hour. So $7.25 an hour times 1.5 gets you $10.88, and that's for overtime hours. And again, they can only take a tip credit of this much, but the employer actually has to pay you a higher cash wage. So $10.88 minus 512. So your employer has to pay you $5.76 per hour in cash wages. So yes, they have to pay you more per hour of work, plain and simple. Now, if for any reason you don't get any tips, so let's pretend you work 1 hour, getting paid $7.25 an hour. Well, if you work that 1 hour, you wait on 6 tables, and nobody puts cash on the table, nobody puts any charge tips or credit card tips on their bill, and you get $0 in tips, nothing, not even a penny. Your employer has to pay you $7.25 for that hour that you work. So they're going to actually pay you $2.13 plus the $5.12. They can't pay you less than that. So if you only worked 1 hour in an entire pay period and you just happen to get no tips at all, they're going to still have to pay you minimum wage. So the employer's on the hook for the whole thing. All right. So I just wanted to kind of go over those rules real quick, just so it makes this scenario we're about to go through a lot more clear. So what I want to do is I want to go over these specific scenarios with you to help make some sense. So in this case, we want to talk about a scenario where you earn a high number of cash tips. Let's just say you earn $1,000 in cash tips. But let's say another work week, you work the same number of hours. So we'll say 80 hours worked. And then in another one, we're going to say the same number of hours, but we're going to say this time you earned $409.60 in cash tips. Okay. And you still worked 80 hours. Okay, so both of these scenarios don't look too much different, right? They're not too far apart. However, it's this number right here that's going to have a significant impact. So what's going to happen to your wages in between these two things? Well, let's break it down for you. So at a bare minimum, you have to be paid $2.13 an hour in cash wages. And that's cash wages. The employer owes you, in other words, right? So $2.13 an hour times 80 hours gives me 170.40. Okay, so same numbers, pretty simple at this point. Okay. Now, what the employer has to do when they pay you is they have to account for the wages that you've earned so they can calculate your taxes. So even though these dollar amounts are in your possession and in your pocket and in your bank account or in your wallet, or if you've already spent it, that's in your possession. So the employer doesn't have to pay you again, but for gross wages, they have to include that number in your gross wages so they can calculate your taxes. So I want to show you a couple of things that'll kind of clarify what's going to happen in these scenarios. So in this situation, they're going to pay you 1,170.40 in gross wages. Okay. And then this scenario, they're going to pay you 580 in gross wages. Okay. So you can clearly tell that there are scenarios that are going to be much different when it comes to taxes. So hopefully this makes sense. The more you earn, the higher your taxes are going to be. That's just plain and simple. That's how taxes work. The lower amount you make, the lower your taxes will be. Okay, so there's a very high chance that you might walk away with no taxes at all. Okay, those tax levels are pretty specific, so it is possible. So if we were to calculate taxes, you have to pay federal income tax on that. You have to pay state income tax. You have to pay Social Security and Medicare. So again, FIT, SIT, Social Security, and Medicare. To make it simple, Social Security is 6.2% of your wages. Medicare is 1.45%. All right. So if we take that into consideration without pulling a tax table up and without doing this math on a spreadsheet and making your mind spin, I want to use realistic numbers and just kind of talk it through as if it was making more sense from this level without going through too many complicated tax tables, because trust me, it can get pretty complicated if we let it. So when we're calculating the wages here, we can see that there's 1,170.40 on this side, and then there's a lower number on this side. So they're the exact same scenario, except you're paid less in cash tips. So let's just say, for sake of argument, that your federal income taxes are 8%. And let's say that your state income taxes are 5%. Okay. So let's kind of go through that. So if we take 1,170.40 times 0.08, we get $93.63. Okay. And if we take 1,170.40 times 0.05, that gives us $58.52. Okay. And if we take that same number and go 0.062%, that's going to get us $72.57. And then lastly, we take our Medicare, which will give us $16.97. Okay. So we'll get our total here in just a moment, but let's go work on the other side. Let's say this is 8%, and let's say this is 5%. All right. Now 580 is not a whole lot. So I'm not going to sit here and tell you there's not a chance that you won't have federal income taxes withheld. There's a very high chance that if you don't earn enough that you might not have taxes taken. So let's keep that in mind, that based on what you're filing on your federal income taxes could drastically change what's going to happen for tax wise. You might not have any taxes pulled out of this paycheck just based on the sheer size of it. The smaller it is, the chances are you won't have any federal income taxes withheld. That's always possible. But again, we're going to be fair and we're going to do some equal opportunity here on these wages. So if I say that this is going to be $46.40 times 0.05, got 29 bucks. And then we multiply by 0.062, got 35 bucks, 96 cents. And then times 0.0145 gives us $8.41. Okay. All right, so now that we have those numbers, let's go ahead and add them together and come up with the total. So we have $119.77 taxes. Okay, and on the other side, we'll add that up too. Okay, so 241.69. Okay, so we have enough information here to where we know what our total taxes are for both groups. Now is the fun part. When the employer does this, they know how much your taxes are. So now they know that your gross wages are this number. But what they have to do is they have to take the federal income taxes out. So what they're doing is they're actually going to subtract the cash tips that you're already paid. So cash tips. So they put it in there to calculate the taxes, then they take it out. So this way they can figure out, do they have enough wages to pull the taxes out? Okay. So again, follow me here. So we're left with 170, 40, 170, 40. So not too much of a different situation, except now you have more money, in your pocket this time and less money in your pocket this time. Okay. So look at your taxes. You have 119.77. So minus 119.77. Over here, you have 241.69. Clearly, the taxes are higher than the amount that you have over here. So let me use a different color pencil here. So this is a little bit easier. Better yet, let's do orange. I like orange better. So your taxes are clearly higher over here, and they're clearly lower over here. So with both of those scenarios, this is going to end up being a $0 net check. So you're going to go home with nothing in this case. You're just going to have that $1,000 in your pocket. So literally all you brought home was $1,000. And you're not going to get any additional money from your employer because your taxes were higher than your actual wages that you're owed. On the other hand, you've got $170.40 minus 119.77. So you'll go home with $50.63. And that's what your employer has to pay you. So that's your net check. So I wanted to prove a couple of things to you. This TikTok user that I did my first video on YouTube, she said she went home with $0 on one check. She went home with $0 on another check. And then she went home with $0.01. So this was a biweekly frequency, by the way, for all three of these checks. And she went home with $0 on the first two and then 1 cent on the next one. Her claim was tip your servers. So I want you to look at that and I want you to make an assessment about what I just showed you. So clearly, if she went home with $0, compare that to this scenario right here. Clearly, she went home with a lot of tips, $1,000 over a 2-week period. The last time I checked, $10 an hour is, $400 a week. So if you make $10 an hour, $400 a week, that's probably more than what most people are used to making. And I'm not trying to be disrespectful, I promise, but $10 an hour is a lot for a tipped employee, I would assume. If you're working at a high-end restaurant, that's probably on the low end. Okay. So we can make, comparisons, apples to apples, oranges to oranges, and we could probably say how in some places you should expect to make more. And I get that. But if you bring home $1,000 afterwards, basically, this young lady, I know she's going to TikTok saying tip your servers, but she's actually averaging $12.50 an hour, believe it or not, like in what she's going home with. So she went home with $12.50 an hour, like $12.50 an hour. And that's after taxes. In this situation, if she went home with a little bit of money, this might mean she's actually going home with a little bit more. So, like, look, this is her cash tips. So technically she's going home with 409.60 plus the $50.63. So she's going to go home with 460.23. If we divide that by 80 hours, so it's much lower. So I can make a valid assumption here without even talking to this young lady to say that you were tipped for sure. Because if you went home with 1 cent or $0 in those first two checks, chances are you made a high number of cash tips. If you went home with a penny, it's plausible that if you didn't work any overtime and we just use this same scenario, that you're probably going to go home with more tips than what's listed over here. Clearly this is 409.60. If I did a little bit more math, a little bit more stringently, I'm sure I can find a way to get that check to a penny. But just to keep it simple, this is what happens in situations where you go home with no money in one scenario, and then another time you go home with something on your paycheck. And I'm saying the physical paycheck your employer pays you, because these cash tips are in your possession the whole time. That's not being taken away from you. So whatever else is sent to you is just icing on the cake. So I just wanted to show you this video and kind of go through these scenarios with you to help you understand how cash tips work inside of employment. So I hope this has given you a little bit more insight about what you can anticipate on your paychecks. And again, feel free to like and subscribe to the videos. I'm always happy to respond back to your comments. Love hearing from you. And thank you for your support. Y'all take care.